Welcome back to another episode of the Crypto Deep Dive, where we wade through the digital bloodbath so you don't have to. I'm Laurie, your resident skeptic and professional question asker.
And I'm Nick, blockchain analyst, chart whisperer, and apparently the guy who explains why your portfolio is crying today.
Episode 19, folks, and what a day to be alive, or, slightly less wealthy. Nick, I opened my portfolio this morning and, spoiler alert, it's all red, like a emergency stop red. What's going on? Did Bitcoin catch a cold?
Oh, it's more than a cold, Laurie. The whole market's sneezing, coughing, and contemplating a trip to the ER. We've got a perfect storm: geopolitics, regulatory drama, technical breakdowns, and my personal favorite, mass panic.
So just another Saturday in crypto, then.
Exactly. But let's break it down for our listeners before they start panic selling their hardware wallets.
Let's start with the big one, US-China trade talks. I thought we left trade wars in 2019 with TikTok dance challenges.
You'd think, but no. The US Treasury Secretary, Scott Bessent, for those keeping score, confirmed that negotiations with China have stalled. That's like telling the global markets, hey, remember all that uncertainty you hate? Here's some more. Investors everywhere went risk off, and crypto, being the poster child for risky assets, took the brunt.
So Wall Street gets nervous and suddenly my meme coins are in free fall. Love that for us.
It's the butterfly effect, Laurie. Somewhere in Washington, a trade talk stalls, and somewhere else, a Shiba Inu sheds a tear.
But wait, there's more. China's back at it again with the bans. I swear, it's like their favorite hobby.
You're not wrong. This time they've gone full throttle, not just banning trading or mining, but outright prohibiting private ownership of crypto. That's like banning umbrellas because you're worried about rain.
So what happens to all those people who don't own any crypto, but just happen to have a hardware wallet under the mattress?
I'd say they're suddenly very interested in VPNs and plausible deniability. But seriously, this kind of regulatory sledgehammer sends shockwaves through the market. People panic, they dump their holdings, and prices spiral down.
So classic FUD, fear, uncertainty, and damn it, not again.
Exactly. The market hates uncertainty, and China's just delivered a truckload.
Let's talk liquidations. I saw some numbers that made my eyes water. $683 million in futures wiped out in 24 hours.
Yup, that's the sound of leveraged traders learning what liquidation really means. Over-leveraged longs got absolutely nuked. When prices drop, exchanges start closing out positions automatically, which pushes prices down even further, a delightful little feedback loop.
So it's like a margin call, but with more existential dread?
And more memes. But yes, it's a cascade. One big drop triggers a wave of forced selling, which triggers more drops, and so on. It's like dominoes, but everyone's portfolio is the last tile.
I keep hearing about this technical breakdown. Is that just a fancy way of saying the charts look ugly?
Ugly is an understatement. The total crypto market cap fell below a key support level, $3.35 trillion. When that happens, all those stop-loss orders and algorithmic traders kick in, selling automatically. It's like the market's version of a fire drill, except everyone's running for the same exit.
So algorithms are panicking now too. Great. At least we humans have company.
Hey, misery loves algorithmic company.
Let's talk ETFs. I thought spot Bitcoin ETFs were supposed to be the grown-ups in the room. What happened?
They were, until they weren't. After a 10-day streak of inflows, we saw net outflows today. That means big institutional players are pulling money out, which spooks everyone else. Add in some good old-fashioned profit taking, since Bitcoin hit new all-time highs last week, and you've got more selling pressure.
So Wall Street's taking profits and retail investors are left holding the bag. Again.
Classic. It's the circle of life, crypto edition.
And apparently June is just a bad month for crypto. Is that a thing now?
Statistically, yeah. June tends to be one of the weaker months for returns. Some investors preemptively reposition, just in case history repeats itself. It's like bringing an umbrella because you heard it might rain, except the umbrella costs $100,000 and is called Bitcoin.
So we're blaming the calendar now. I love that. Let's jump to some listener questions. First up, should I sell everything and move to a cabin in the woods?
Well, unless your cabin has fiber internet and a cold wallet, probably not. Volatility is part of the game. If you're in crypto, you've signed up for this roller coaster, no refunds.
Next question, is this the start of a bear market?
Not necessarily. Corrections happen, especially after new highs. Unless we see sustained downward momentum and a total collapse in sentiment, this is just another chapter in the book of crypto volatility.
So don't panic, but maybe keep the tissues handy. Nick, if you had to sum up today's market in 3 words, what would they be?
Bloodbath, banter, pain, paracetamol.
That's 4, but I'll allow it. Any final words for the hodlers out there?
Stay calm, zoom out, and remember, volatility is the price of admission. If you're not comfortable with days like this, maybe stick to collecting stamps.
Or Beanie Babies. Those never crash, right?
Let's not open that can of worms.
All right. That's it for episode 19 of the Crypto Deep Dive. If you survived today's market, give yourself a pat on the back and maybe a glass of something strong.
We'll be back soon with our next episode, hopefully with less red and more green. Until then, keep your private keys safe and your sense of humor closer.
See you in the next episode, folks. Hopefully on the other side of the dip.